Start,
Say
please.
yes, mom. Good morning, doctor, professor, and all participants. Now my turn for part 5. Assurance service beyond financial audit. Assurance service beyond financial audits are extend far beyond traditional financial audit, compass with vast range of non-financial area, with independent professionals provide objective evaluation to enhance the reliability, credibility, and decision-making of information. Each axis was the component when come to report beyond financial audit. First of all, what each axis stand for? Each axis stand for environmental, social, and government. Environmental focus to ensure the company impact on planet environment friendly, include climate change, make sure that not affect carbon emission and how to control their energy efficiency, resource depletion, how to control water usage or waste management, pollution, the toxic emission, the forest which can lead to affect all living creature. For stand for social, focus on company work environment, labor practice, fair wage, workplace safety regulator from government. Diversity, gender gap, no racism in the workplace. Government should not be more money related or insider threat which affect for decision making. Anti-corruption make sure that not involve crime to do business or black market to do business. Next slide.
Sir, the last one is governance, is it?
Governance.
Okay.
And how we ensure the company adapt the ESGs. There are many frameworks and standards for them to ensure ESGs. Yet, two standards have to use by many large corporate and governments, which are Global Report Initiative or GIR or International Stability Standard Board or ISSB. Bong make sure or inside bong here. Yes.
Yes, all right. Yeah.
GRI focus more likely on reporting covert ESG impact. They more likely used by corporate SME, small enterprise, NGO, or community or ex-employees apply to their department. For ISSB, focus on the disclose for financial materiality and how sustainability can affect the whole their enterprise. It's more likely used by public company. Next slide, we can see the benefit for ESG governance procedures, yet there are many challenges for the audit or entity to adapt that procedures in their workplace. Lack of standard that unlike of financial standard which follow clear and universal standards, ESG is still developing. ESG factors are highly complex and interconnected. For example, environmental factors can have social and governance implications, which factors are consistently involved our understanding and stability and integral. Data available and quality are the major challenge for ESG along with the quality information for framework to apply accuracy for ESG performance with entity nature. Move to my other point. The forensic audit and fraud detection are specialized area for the financial analysis focus on identify fraud and activity. And here are the some fraud detection and forensic audit. Asset misappropriate, the inventory or insecurity, fake invoice of payroll fraud, financial statement fraud are overstate revenue or hiding liability in report. corruption, bribery, conflict of interest, unauthorized payment to government or related party for the private interest inside the trade, illegal trading based on non-public news or executive top management traded or share internal information with outsider. And here are some keys for detection in the forensic audit. Identify fraud risk, evaluate internal control, understand the high risk for each department, define investigation, focus on specific transition time period, evidence collection, verify invoice, email, bank statement, or internal self-confirmation. Interview to understand and evaluate through the interview internal control and how their segregation of duty work. Data analysis technique link the analysis track or the relationship between entity, department, or the person interest. Implemented software which can correct, generate data and detection even in large global database or even outsource expert to do the data analysis without of scope of audit technique and financial. From now on, I have talked about fraud and detection and forensic audit. Now, I would like to show the one case with less of oversight, assurance, on above procedure might affect. It was Iran. Iran used to be the biggest energy supply in the world. The CEO who used the financial fraud to hide billion in debt by increase fake revenue to show accrued income, sell company to use to give many related party benefit interest inside the trade with involve many management and even their audit that caused the bankrupt company, the biggest one in the history. Even their external audit firm, Ento Anderson, was the one of the biggest file at that time, also bankrupt too. Due to their failure to show the fraud report with the fair is industry procedure to review Aaron financial statement with them collapse in the biggest history in accounting firms too. For the case Aaron with Andrew Anderson, for we can say that both entity and accounting firms for its corporate need to show proper their fair and view to provide for all stakeholders and person who involved was affected by their report, which led to my last point, assurance for integrity reporting, refer to the process to verify the quality, accuracy, the reliabilities of information disclosed in report by Framework International Integrity Reporting Council, or we call it IIRC. The object of IIRC was provide the necessary framework for environmental, social factors to be taken into account systematically in reporting and decision making. Support information need of long-term investor by solving the board and the long-term consequence of decision making. Reflect the interconnection between environmental, social, government, financial factors and decisions that affect the long-term performance and condition, and make clear link between sustainability and economic. Rebalance performance metrics away from undue emphasis on short-term financial performance. Bring the reporting closer to information by management to run business on day-to-day basis. That's all for my presentation.
Okay, very good topic, Sal. This is very interesting. Can you move to the first slide of your section? Rian, can you correct the environment, the last section? To environment, social, and
Governance.
Can you correct? And then I will ask a question.
I will correct later. Wrong.
Okay. Okay. So this is beyond financial audit. That's quite challenging for auditor currently. Currently, there's a big requirement from Europe, especially for those company here in Cambodia, especially government sector. And, for those manufacturing, the government manufacturer in Cambodia, they require to meet these three in order to receive the purchase order from the big brand from Europe or from US, especially, for example, like Nike, Gap, Uniqlo, Kevin, I forgot the brand name, the big brand name, big brand name like Adidas or other big brand, before they make an order to the manufacturing company in Cambodia, they come and do assessment whether that manufacturing company pass these three or not, this ESG, because you put here about environment, social, and governance. I want you to share, but don't example the specific name, but just say the company, just say from your experience, for some manufacturing company that receiving order from big brand like Calvin Klein, Casey, right? Is it Casey? Or Nike, and then they require this ESG reporting. And because we do financial audit, we cannot do ESG audit currently because of the resource limitation, the skill. From your experience, do you think most manufacturing company meeting this criteria?
No, but they try to meet those criteria. Example, manufacturers try to use solar power to decrease the electric power, which affect the government. And some requirement from the biggest buyers, they ask to give the food for the worker, social insurance for make sure that all the worker give the social benefit.
But in these three, environment, social, and governance, so which one of these most factories meet?
The environmental.
Environment or social?
Social.
Social, normally in Cambodia, they are now focusing on social improvement is the second things. But I think now they think about carbon footprint. For example, many NGO like UNDP or my organization, when we purchase any air ticket, we will contribute to one of the carbon portal we call Puthisal, which we record how many ton per person on the plane using. So right now the new trend is we think about carbon footprint, I can say. And like Lisa said, the mechanism of using solar instead of pure electricity is one of the financial shift for many factory. But in the case of installing solar, we have many challenges with the government because the reduction in electricity consumption will lead to decrease the revenue from the EDC. I think there are a lot of things to discuss. But for environment, I can say 90% of the company in Cambodia not yet meet the environment standard. That is why in the next part, we will talk about how to assess the ESG through blockchain technology that can enhancing the technology into provide more insightful for the auditor to see what's going on under ESG.
Yeah, that's good. That's good sharing. And another thing about board diversity and anti-corruption policy, how do you think? The compliance rate. You can say in general.
50-50.
Because I still see that the limitation of board, the governance, the big challenges for the companies in Cambodia is about governance. Even small, big or large corporation, but they still have limitation with the governance, except for listed company and bank. They play very good, with the board of directors, with the anti-corruption policy. But beside bank, insurance, and listed company, there are still room for improvement. There's a big gap, especially, some manufacturing company, they don't have a good arrangement of the board diversity. And also anti-corruption policy in place. Now, there is no written policy sometimes, except for some international NGO, they have anti-corruption policy. But for factory, no, they don't have, I think. And even the board policy procedure, they don't have to. But they have done well for social for the last 3 years. They have pension fund, they have an SF, they follow labor compliance, they have labor union, everything. That's good. And environment, some company, they use solar panel as renewable energy adoption. They engage with Total Energy company that is French owned company. They have this technology and then set up with the specific manufacturing company. And then but normally when those factory, they have three combination in place, normally they pass the assessment from Europe, from US, and then they can receive big order from big brand. But that's very good. But the thing is about, as an auditor, that's quite big challenging in assessing this area as well, for environment, for social, and for governance. And that is the special and separate reporting standard. For IFO, for International Sustainability Board, they have two standards. They call ISS1 and IFO, I forgot, but the end of the digit is 1 and 2. There are two standards covering this ESG reporting. But that's good. We have more time to learn about ESG because, the world now changing and they start taking care about ESG. Before they just say about UN sustainable goal. Now they say about ESG, not just about the environment and social, but they say about governance. The governance is about the management at the top and the corruption and the good practice. So thank you, Sar and team. So I think I don't have more questions unless team have. If not, you can move on. Here, you are the team lead, so you can.
The topic is issues in auditor liability and reporting. Auditor liability, legal path include negligence.
It's good if you can connect, before moving. For example, it's
Can you
about
hear me?
overall. Let's say you connect about the why auditor liability and reporting something, and then let the team understand.